All right. Back to work. Boy, it wasn't always pretty today, but patience paid off. Finally got the beautiful reversal we talked about in last night's video. Well done on that. Now you know why I said end of month, end of quarter volatility, right? Well, now we got 1 day left this week. We got three pretty obvious clues right now on the charts telling us where the winners are going to be for tomorrow. By the time we're done this video tonight, you'll have an easy roadmap to make some money on the final trading day of the week, the month, and the quarter. Now, we have a ton of important information to cover tonight on the video. Before we jump in and get our hands dirty on these charts, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so hit that subscribe button. And if you enjoyed these lessons, if you like these videos, hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section below. All kidding aside, though, thank you so much for sticking around, tuning in, supporting the channel. Love the intro, though. Let's get going for Thursday. Thursday's not going to trade itself right now. Where are the best trades setting up for the final day of the quarter? Nasdaq triple Qs are ready. Oh, we got the E-mini and the SPY is ready. There are three very important clues on these charts right now telling us where the winners are going to be to finish up the week tomorrow. One of those clues is right here on the 60-minute time frames. And of course, we have those big moves higher on the S&P after FOMC, big move higher on the Nasdaq. That big move higher tells us we are looking to deep pull back and go back up and retest those highs here. So we know the 60-minute time frame right now tells us it's definitely not a bear market right now. We are definitely a bullish overall market. That will give us our directional bias, our filter for tomorrow. That tells us where the odds are stacked in our favor. But again, I have two more, even more important clues on the tick charts here tonight. Before we dive into tick charts, though, and talk about two more important clues and timing of the entries, because the direction is kind of the easy part, right? Before we dive into the tick charts, though, let's check our schedule for tomorrow, because there are three things on my mind tomorrow, three things I want you to be aware of as well. First of all, of course, is that GDP number coming out at 8:30 Eastern time. And the block of news here, we got Chicago PMI, consumer sentiment. Chicago PMI is probably the big news of that block. But, you know, anytime there's news at 10 o'clock, I always pay attention. So two important news events tomorrow. The GDP number, obviously, is the headline number tomorrow. But anytime we have news at 9:45, 10 o'clock, right, you want to be paying attention. That's one thing on my mind for tomorrow. Again, as we talked about in last night's video, we have the end of the week, end of the month, end of the quarter. Tomorrow is the final trading day of the week, the month, and the quarter because, of course, Friday is Good Friday holiday. So markets close up tomorrow night, 5 o'clock Eastern time, and they stay closed until Sunday. So be aware, tomorrow is a lot like a Friday, right? Which means it's early in, remove risk, take some profit. And what do we always say on Fridays, right? The Friday mindset. What's the Friday mindset? Get in early when we're at our best, when the markets are at their best. Get in early, take some profit early, remove risk early. And one thing about the end of the week, end of the month, the volume dries up into the close. So leave those runners, right? It's just like a Friday mindset we talk a lot about on these videos. That's the second thing on my mind for tomorrow. And of course, with Friday being completely closed, there'll be no video tomorrow night. Unfortunately, no video newsletter tomorrow night. I'll be there with you guys, of course, tomorrow during the morning trade room here for all the SOT students. So be aware of the news, GDP, and of course, the Chicago PMI at 9:45, end of the month volatility. Think of tomorrow, that Friday mindset, early in, take profit early, remove risk early, leave that runner. And again, I'll miss you guys tomorrow night. If I don't see you guys tomorrow in the trade room, have a very, very happy holiday weekend. If you're traveling out there, safe travels over the holiday weekend. Now, back to our charts, though. We're not quite ready to go Easter egg hunting just yet, are we, right? The money is made on the charts. Let's now dive in and talk my favorite trades here for tomorrow. Let's grab the S&P and the SPY first. We'll wrap things up, of course, on the Nasdaq and the triple Qs tonight. The S&P and the Nasdaq are quite different tonight, so we'll talk about this in more detail as we go. I mentioned earlier there are three important clues telling us where the winners are for the final day of the quarter. One of those clues, of course, is this overall bullish bias. That gives us the best directional odds for tomorrow. But now let's drill down to some tick charts. Tick charts are where we find entries in our trade room, right? Much easier to trade off a tick chart. This, of course, is a 7,000 tick chart linked up there in the upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. That is the 21 EMA. It's pretty much the only indicator we need to use to find lots of winners each week in our members trade room. There are two, I think, even more important clues right now on this tick chart. First one is this huge move running higher this afternoon. Bears got squeezed. Market jumped up on low volume this afternoon. Now, why is a big move important? Well, a big move tells us, first of all, let's not chase this and buy high, right? I do not want to chase this and buy high. I want to buy nice and low. And boy, did we see a great example of this on the Nasdaq today. We'll talk about that in a moment. But whenever we see a big move like this, we always think about that two-legged pullback and a retest of the high. A two-legged pullback and a retest of the high. We're going to dig into that in a lot more detail in a moment. So we'll talk about how to structure the two-legged pullback. There are 3 different ways in which we can time the entry on a two-legged pullback. I'm going to give you guys the roadmap on that, but hold on tight though, because there's one more important clue, and that is that range we saw. Now, we talk a lot about ranges in our free video classes, right? Anytime we see a range breakout, what happens? Not every time, but most of the time, markets will pull back and break out, pull back, right? So we've got levels, of course, here at 87, 81. This kind of whole area right there, right, is going to be a breakout pullback zone. Now, you might be noticing, too, we have this area over here. This is a very interesting spot, too. I'm going to talk about that towards the tail end of the lesson in the S&P tonight because we may not get that full breakout pullback. We'll talk about if we get a shallow pullback here in a moment. But, put all these clues together, right? We're bullish overall on the 60-minute time frame. We get a big move higher and a range breakout. Yeah, it definitely looks like a two-legged pullback. It's certainly going to be on our radar for tomorrow. As we go deeper tonight, we'll talk about how to short this thing during that pullback. Got to be careful, though, shorting, right, an overall bull market. We'll talk about the right game plan on that in a moment. But first, though, let's talk about that two-legged pullback, right? When I say two-legged pullback, in the free video course, we talk about measured moves. And measured moves are really nothing more than a symmetry, right? So A, B, C, D. So think about a measured move that goes a little bit too far, right? Think about a measured move that goes a little bit too far, right? A little bit too far. The key to these is you want to get underneath the moving average and then go lower from there, right? That's going to give me the general area of that two-legged pullback. Now, you know me, right? I don't like to pick the bottoms on these because, for all I know, it's end of the month, end of the quarter. We may do it here. I don't know. I don't know exactly where that will be just yet or how far it will go, but that's a general idea. Get that two-legged pullback going lower. And again, I don't like to pick bottoms on these. So rather than trying to pick the bottom on that, what I'd rather do is wait for the pullback to the moving average. Because once they pull back to the 21 moving average, if I start seeing bears try once and bears try twice, see, now they're stuck, right? Now they're stuck short, right? Just like over here, right? We go down, bears once, bears twice, right? Now those bears are stuck, and when their stops get hit, bam, right? These things love to squeeze. So again, if I can get that two-legged pullback, bit more than a measured move, don't pick the bottom, wait for those bears to come in, trap them in twice because I need those stops to fuel that move going back higher. Now, where does the market want to go? Oh, and by the way, in the free video classes, we call these failure patterns. This would be a two-try failure off the breakout pullback zone, off the channel, on the two-legged pullback. Now, pay attention real quickly here because oftentimes we know the market wants to go where? It wants to go back up and take out that high, right? So as the market runs higher, there's one more trade I always look for. It's called a bear trap pattern. Now, bear trap patterns, you really need to learn these because they're one of the most reliable trades I know as a trader. Bear trap patterns. It's very simple. As we go higher here, it's going to separate off the 21 EMA, right? It'll barely pull back and miss that 21 EMA. It'll be a higher high in price and a move right below that low, all right? And again, targets are back up to retest the high. And because tomorrow is kind of like a Friday, right? Take profit and to leave that runner on the way back to retest those highs we talked about earlier on the 60-minute time frame. So I want to think about that, right? That two-legged pullback, trap the bears in, and grab that bear trap on the way back up. Now, a couple of variations of this I want you to be aware of because that's what I want tomorrow. But you probably know this by now. The markets are wild these days, right? So let's talk about some variations of this. A lot of times what happens is we'll get that two-legged pullback. We'll get that entry with that 2-try failure, and we'll get a winner off this. Oftentimes we'll get that nice easy winner. They'll hold off the underbelly though of the bottom of that first leg, and they'll go back down and retest the low. Again, on these, we'll take our first profit targets. We'll move that stop up to point of entry, so risk is off on it. But unfortunately, right, because it was a strong move down, the bears come in, they whack it off that high, and they retest that low. Now, think about this. If you're a short seller and you're selling the pullback right there, where would you take your profit? If it was me, I would take the bulk of the position off on the retest of that low, because again, it's a range and it's an overall bull market. So is it safe to assume that anyone who sold on that pullback, they become a buyer down here, right? Only way you take profit on your short is to buy your way out. So sellers become buyers at that low. Can we all agree on that? Now, what if we try to go lower, and what if the rookies come in, right? We assume these are rookies. These are not professionals selling way down here, right? Rookies will sell high, won't sell low. So what if we get some rookies coming in and they get those bears trying once, trying twice? What do you think happens now? What if those sellers get stopped out here? Can we all agree they become buyers as well? All right. Now, we're already in a bull market, breakout, pullback. This is an area where everyone becomes a buyer. The sellers are buyers, either because they're taking profit or they're getting stopped out, and buyers are going to gobble up these double bottoms because, again, it's an overall bull market. Now, again, this would be one of those 2-try failure patterns. If we go higher, the market wants to go back up and take out that high. So as we go higher here, look for that same pattern again. It's the higher high in price, and that bear trap pattern. Take some profit off at that high, leave that runner back to that high, right? So again, 2-legged pullback, and keep your eyes open for that double, we call these double bottom reversals. They're oftentimes the most lucrative trades we find every week in our trade room. Now, let's slow down for a second, because I know that most of you guys and gals watching right now, you've taken the free video classes. You're making money with traps and failures, double bottom reversals. But if you're watching for the first time right now, this might be brand new to you. I do look at things a bit differently here on this YouTube channel than I think a lot of other YouTubers do. So this might be way over your head right now, but don't you worry. I teach all of these entry patterns. I have hundreds of examples of failures, bear traps, and everything in between, all taught in a lot more detail in our free video classes. I'll hook you up. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up and take that free trading course, because the strategy you'll learn in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then I want to help you make money on your own. I'll teach you 4 my favorite entry patterns, help kickstart you making money on your own. If you're not making consistent money right now, if you're missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit that link up top there. That will give you an easy roadmap to follow every day. Perfect for someone trying to make the jump into full-time trading. And also be aware too, if you can't grab the link up top there, I'll put all the important links we talked about tonight down in the description of the YouTube video. Put the free class links. We trade together every morning in our trade room. I'll put trade room membership links in the description of the video. And also, too, if you're on Twitter, I post a lot of updates on Twitter during the day. If you're on Twitter, give me a follow. All the important stuff here, of course, description of the YouTube video. Now, I have 2 more variations of this later on in the video. Because tomorrow is the end of the quarter, right? Because tomorrow is the end of the quarter, there's one specific type of scenario I will be looking forward to tomorrow, end of the quarter. We're going to cover that in a moment here on the Nasdaq. So if you're serious about making money tomorrow, there's one type of end of quarter, end of month setup I'm tracking for tomorrow. I'm going to cover that towards the end of the lesson. I'll give you reason to stick around all the way to the end here on the Nasdaq. Now, I mentioned earlier, we have this support level right here, right? This technically is another breakout pullback area, right? That area right there. I want the 2-legged pullback, right? And buy back up again. But you know, we've got a bull market overall. It's a big range here, breakout. I could easily see them pulling back. I could easily see some aggressive sellers coming in here and trying to short this thing down here. And if they fail once and they fail twice, in the trade room, we call these shallow pullback traps. Okay, now think about this, right? I'll bet with all the volatility we're seeing right now, I'll bet there will be a lot of bears who are trying to short this thing back down again. And I will talk about my favorite way to short a bull market like this in a moment, so don't go anywhere. But first of all, though, if I start seeing these bears try to short once and they try twice, if I'm seeing higher highs in price and move right below that low, if I can get a nice, strong green candle, we talk about this, of course, in the free video classes, that would be what you call a shallow pullback bear trap, right? We pull back, we hold off this area, we get underneath the 21 EMA, the bears come in. They're trying to short this thing back down again. They try once, they go higher, they try twice. If I can buy nice and low with that bear trap pattern, below low, right? Same pattern, right? Higher high in price, move below the low. That will give us that signal back to retest the high. And then keep in mind too on this one, if we get a shallow pullback trap like this, the size of that breakout leg, I'm going to pin that at the low of that move and use that to project the target for tomorrow. All right, because oftentimes the breakout leg of a trading range becomes a measuring leg. Again, if we hold that shallow pullback, I'm going to measure the size of that breakout leg, that size right there. Then I'm going to pin it at the lowest part of that pullback, and that will tell me where to leave that runner. Remember, if you want to make more money, get better at staying patient and letting your trades play out. Boy, did that happen this afternoon. Now, everybody wants to know, with all this volatility back and forth, how do we short this thing off the high? Well, first of all, it's a bull market overall. So first of all, it's a half size position. It's a quarter size position. Anytime I'm going against the 60-minute direction, I always go smaller size, right? I'll let you make a decision on your own. Now, if we're bullish overall, I don't have any momentum on my side right now. You can think whatever you want about that short, but momentum is all bullish right now. So because I don't have any bearish momentum to work with, right? Look at that 60-minute time frame, right? There's no bear momentum right now. It's all bullish overall right now, right? So because I'm going against all the momentum, I need some stop runs to trigger that move down, right? I need something like this. Right? We got to go up. We have to get some aggressive buyers in here and trap them in and sell into those stops, right? Because again, we know the most buyers are waiting down here. So if I can see a shallow pullback right now and buyers sort of buy it up once, we can all agree, right? This is probably a little bit too high to buy right now, right? It may keep going higher, but historically, this is probably a bit too high to buy after a big move like that and, of course, a breakout pullback waiting below. So I don't like the idea of buying too high on this. If I start seeing, so I assume these are rookies up here, if they buy once and go lower, buy twice. Now remember, buyers want to buy low. They try once, they go lower, they try twice. Okay, buyers want to buy low, lower low in price. Very important because that tells us now the buyers are trapped in. Now remember, right, we're not going to blindly sell this. If I can get a strong signal now, closing firmly below the 21 EMA, we call these crown reversal patterns. We talked a lot about the two-legged pullback, right? 1, 2, bit more than a measured move. That now tells you where to cash that paycheck, right? On the way down. And again, remember, we're not going to sell down here though, right? We come in, we trap the bears in, squeeze back up again. So if we're lucky tomorrow, we might get a bit of a double dip right off that high. Again though, remember, half size position, quarter size position, trap those buyers in, right? Trap those rookies in once, lower low, twice. And again, you'll see in a moment here, well, zoom in on that right there, right? That is a great example right there, right there. We go down, right? Bears once, bulls once, bulls twice. Little trap high right there, and no wonder, folks, we're selling it back down again. All right, so be careful on those short sides. Now, there's one type of situation we look for, or I kind of hope for, anticipate tomorrow as we go into the end of the month and the end of the quarter. Let's talk about that now, of course, on the Nasdaq. Nasdaq is a bloody mess right now, but the 60-minute time frame tells us we're still an overall bull market. I know it's been a bit messier on the NQ right now. Bull market into a trading range. Buyers are trying to complete their pendulum swing here, maybe tomorrow, maybe early in the month of April. We focus, though, on the buy side here. And if we do sell short, smaller size position. Now, over on the NASDAQ had similar stuff here. This, of course, is a 4,000 tick chart. We have that range right there. And I will definitely say the Nasdaq, not nearly as dramatic of a strong move, right, as the S&P was, right? The S&P was that a huge move, right, which made the S&P very likely for that two-legged pullback and a retest like this. On the Nasdaq, I would not be surprised whatsoever because the size of this move, it's still a pretty strong move, but it's not as epic, right, as the one we saw on the S&P. Again, think about that two-legged pullback here. I wouldn't be surprised, though, if the Nasdaq, because the Nasdaq is twice as volatile as the S&P, strong run down, right, on the NQ there. I wouldn't be surprised if it ran two-legged pullback all the way back to that low, like to happen today, and then, right, and then 1-2, back up we go, right, or up, double bottom and back up. So same kind of game plan we talked about on the S&P could easily be applied on the Nasdaq. Just don't be surprised on the Nasdaq if we wind up all the way back to that low, because again, the Nasdaq twice as volatile as the S&P. You know this by already, I'm sure. And also too, that breakout is strong, but it's not as convincing, right, as the one on the S&P. So just be aware of that small wrinkle. And again, on the pullback here, this is definitely that spot for that crown reversal, right, during that pullback. And again, think about that. Right, think about that one leg, two leg. That will tell you now where to take that profit and then where to look for, right, those bear trap or that two-try failure pattern into that bear trap pattern we keep talking about over on the S&P. So a very similar game plan on the Nasdaq, but don't be surprised if we do end up collapsing, right, all the way down into that trading range and bouncing off that low of day from today. Now, with the end of the month and the end of the quarter, after all this volatility the last couple of days here, I would expect to see potentially a range here for tomorrow. You want to keep an eye out for a trading range. And there are really three ways I like to look at trading ranges. If you're taking our free video classes, you probably know enough. You probably know quite a bit about ranges. If you're here for the first time right now, you definitely want to take the free video course. Learn how we trade ranges, because ranges are my favorite type of market because they're pretty easy to trade once you learn the roadmap. Now, the most important thing is, and keep in mind, right, I don't know where the range will be. It may be up here. I don't know, right? But if we do go sideways tomorrow, end of the month, end of the week, end of the quarter, there's kind of the basic idea is this. This range, right? This range acts like a magnet, okay? And ranges like to rotate. They want to rotate down, up, and usually they're roughly symmetrical back and forth like that, all right? So kind of keep that in mind. They're magnets and they rotate back and forth. So knowing that, if we're an overall bull market in the 60-minute time frame, if I have a range breakout into a new trading range, which should not surprise anybody, end of the month, end of the quarter, I want to go out and find levels of support underneath the range. And what I'll do here is wait for a breakout. Remember, we're not in the business of picking bottoms. We're not blindly doing anything, right? Just today, we don't blindly buy that pullback, right? But by the way, a beautiful two-legged pullback, I might add, right? Beautiful two-legged pullback we talked about last night on the video and more, of course, here this evening. The goal, of course, is that once we get that trading range, that range becomes the magnet. Let's get underneath that range. Let's trap those bears in and use that same failure into pullback or failure into bear trap combination. All right. Now let's talk about this a little more here, because this is where things get fun. We know that ranges love to rotate, that failure pattern and that bear trap pattern we talked about earlier on the S&P. The range itself is a magnet, so take some profit off right at the top of that trading range. And because tomorrow is kind of like a Friday, leave that runner, the amount below, the amount above. That will give you an idea here now of where to leave that final piece of the trade to run. That's the basic idea of how you want to trade a range. Find the range, find support below the range, and again, don't pick the bottoms, trap the bears in, run those stops. Now, one of my favorite trades, and we talked about this quite a bit on the video last night, is if we have a bullish market into a trading range, if we get that pop down, that bear trap down here, and a convincing breakthrough, and when I say convincing, it'll be well through that pendulum swing, right? So if we take the pendulum swing out and we keep on trucking, right? If this thing just blows right through that pendulum swing, that is a convincing breakout. If we see a convincing breakout, remember we said earlier, breakout pullback, right? So now, if we see the convincing breakout, let's look left now, find the highs of that trading range, range and buy that breakout pullback. Now, at this point, remember, we're not going to pick the top on that, the bottom of that. We're going to wait for that moving average to come up, get underneath that 21 EMA, trap those rookie bears in, shorten that thing, and squeeze those stops for a run going higher. All right? Again, these are called breakout pullbacks. Oftentimes, they begin with kind of a fake out breakout off that low. We slingshot off the low. We mentioned that last night, towards the end of the video last night. It squeezes higher. Again, it's a convincing break right through that pendulum swing. And we now have all that bull momentum, breakout pullback. Don't pick the bottom, trap those bears in, squeeze those stops, profit off, back at that high, and again, breakout leg, measuring leg as we go. All right, guys? Now, one more. You need to learn this final one because this is the most difficult one, all right? Let's see how good you guys are at these. Now, again, the scenario is it's a trading range. Ranges are magnets and they love to rotate. Okay, one of the hardest parts about ranges is oftentimes you'll see stuff like this where it'll break out up. Right? It'd be very tempting to chase it. We don't chase these until we see a very convincing break and then we buy the pullback. All right? We don't buy the breakout. Okay, you will hopefully learn the easy way for my free video classes. You'll learn the easy way, not the hard way, paying for the losses there. We don't trade breakouts. We trade fake out breakouts. What I want you to be aware of here is oftentimes, especially end of the month, they're going to pop up and slam back down again. All right, pop up, slam it down. Now, that crown reversal pattern, that 1, that 2, right, that lower low, that bull trap, that crown reversal pattern we talked about earlier, that can be used for that short back down again. All right, again, half size, quarter size. What I want to be aware of, though, is, remember, the size of that move up, size of that move down, bingo. Now we know that rotation back down again. Now, when it rotates off that high like that, this can be very, very strong for the bears. So don't pick that bottom. Trap those bears in. Squeeze that sucker back up, right? Back up into that trading range. And again, find that pendulum going higher from there, right? Oftentimes, these things will squeeze up, right? Rotate back down, double bottom reversal, right? We mentioned that earlier on the S&P because the momentum of that move off the highs is oftentimes very strong. That fake out breakout, don't buy that breakout. Don't buy high, buy low. And that means either wait for a convincing break and then buy low, right? Or wait to get underneath the range and buy low. All right, guys? Keep an eye out for a range tomorrow. Now we have the bases all covered for tomorrow. Nobody knows what the end of the month, end of the quarter is going to bring, but now we have the plan to make money on Thursday, which kind of feels like a Friday. Now, don't forget, tomorrow morning, 8 o'clock Eastern Time, we'll wrap up the month of March, wrap up the first quarter of the year 2024. Remember, the easiest way to start making consistent money in the markets is to come out and learn this stuff and trade along every morning in our trade room. I will put all the important links tonight in the description of the YouTube video. Got questions, comments, concerns, call the office. I'm always here for live chat as well. So if you want help, need help along the way, definitely keep in touch. I'm always here to help out live chat, call the office, or send us an email. All right, guys? Hope you learned a bunch here tonight. Hope you use this knowledge to make a bunch tomorrow. Hope you guys had a fantastic, fantastic day. Hopefully I'll see you tomorrow morning or sometime soon. Trade with me in the morning room. In the meantime, be well. Be nice to each other out there. Have a great, great holiday weekend back here on Monday evening. As always, adios amigos. Bye for now.